learned to trade from. It taught me a lot about the way I trade now. It's very heavily kind of smart money based with structure, supply and demand, and Wyckoff. And in the grand scheme of things, a lot of the way that I trade is still very similar to kind of smart money concepts. But what I'm trying to do here is I'm trying to just simplify everything. It took me a long time to understand exactly how these things worked. And it was a lot of trial and error and a lot of failures and a lot of trying to catch, like, you see on Instagram all the time, don't you? These kind of 50R moves and these 100R moves. And, they're unrealistic. The amount of losses people take in order to get into those moves is massive. And realistically, the majority of traders who are shooting for those 100R moves, they're not making any money. It's just, I don't know if any of you have ever tried it before, but trying to catch those 1-2 pip stop losses, you've got to be at the charts all the time. You've got to place loads and loads of trades, and ultimately they end up failing quite a lot. So I found my profitability a little while ago now when I moved away from the 1 minute chart. I've never gone back, to be fair, and I've passed multiple prop challenges now, trading 6 figures, pretty happy with that. I should have maxed out my Forex funds capacity by the end of the year, so that's kind of the position I'm in at the moment, and I haven't really... I sometimes will look at the 1 minute chart for a little bit of refinement, but, I trade primarily off the 5 and the 15 minute because the trades are so much more reliable. And if you guys are new to your trading, or even if you have a little bit of experience, I would strongly, strongly advise you master the higher time frames first, and then you'll be able to move on to the lower time frames. So start high, then move down to the medium. Then if you want to, move down to the lower time frames. But since I got off the 1 minute chart, I've never gone back, and I don't need to. I make a decent profit every single week. I'm pretty happy with that, and I don't need to go any lower than the 5 minute chart. I find, this setup here, you could take that quite clearly on the 15 minute chart. Even if you wanted to refine it and take, one of these areas here, that breaker structure there, that was a 5 minute. But again, you can see that quite clearly on the 15 minute. What you'll get when you wait for these breaks of structure on higher time frames is you get much more reliable moves. Okay. If you were just trading, say, the 1 minute chart, let's just look in that area there. How many false entries would you have got? Yeah, loads. And you might have made a bit of money. Okay. You might have made a bit of cash, selling from there and holding down to the low. But really, we want the bigger move, don't we? That's what we're looking for. We're looking for that bigger move to play out that will then take us down, hopefully, to this low. Well, you're only going to get confirmation in one of these higher time frame supply zones. You're only going to get one of these confirmations when you've got a higher time frame trade down as well. So I think it's important to start, if you're new to this, I think it's important to start on the higher time frames, and then you can work your way down if you absolutely need to. Okay. So what I can hopefully provide you is a bit of wisdom. As I said, I'm still, for me, the mentorship is relatively new. That's why I'm offering it you guys completely free of charge. I'm building a course at the moment in the background whilst, it's just that Ebra in. I'm building a course in the background whilst ultimately I'm learning how, what works well with mentoring, what doesn't work well. And this is why I want, you guys that have joined the group early, I want you to be as vocal as possible. I.e., ask me questions, things you're struggling with, contact me directly, put messages in the group, put your trades in the group, put your analysis in the group, and I'll reply to you. Because I need to learn as much as you need to learn. You need to learn how to trade. I need to learn how to mentor. So my background is as a sales coach anyway. So the kind of the coaching side of it comes to me really easily. But the training people to trade is something that's quite new to me, which is why, like I said, it's completely free for you guys. Hopefully I can help you and, make you profitable traders. And we'll see what we can do together, which would be great. Okay. So I want to talk you through kind of the basics of how I trade and what I'm looking for and how, I set up my charts ultimately. So let's just, I'll talk you through kind of some basic tools that I need. So if I haven't got them already, basic stuff. So trend line, ray line to mark out daily highs and lows, obviously the short position tool and the long position tool, your rectangle tool to mark out your supply and demand zones, text tool if you want to write some text on there every now and again, and then the path tool, which is really good for kind of drawing out trends and things like that. Just give you a bit of, sometimes we know that's a downtrend. It's just nice to get a bit of framework on it and just actually see it visually. I think it works really, really well. The GAN box I use quite a lot. This is a GAN box here. So when I talk about the rangefinder in my Instagram stuff, okay, we're talking about the GAN box, okay? You can draw it from a high to a low, okay? You can set up various templates. Do you guys mess about with templates much on your trading view? Do you use templates for things? Yeah, no? Have you not? Okay. Okay, so you're right in the early stages, are you? Just off MetaTrader completely? What do you do your analysis on? Yeah. Okay. 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 Fine. Well, look, support and resistance. I always remember a lesson I had a little while ago, which is really cool. Okay. Support and resistance. The reason why it doesn't work is you can pretty much, if I just use the line tool, okay, you can pretty much plot a line on the marketplace over and over again, and wherever you put it, just completely randomly, you will find areas where price looks like it's rejecting from. Okay, so good example there. Completely random line, rejection, 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 and all of these lines, no matter where they are on the chart. Okay, again, let's just move it down completely randomly. Let's put it there. All of these lines, you'll see price kind of come to them and kind of reject. Now, this is the big thing that showed me that support and resistance is a load of nonsense. Yes, there are areas which support and resistance does respond to, but you can see what I've just done now. I've placed that line completely randomly and look at how many times it's rejected. Okay. The problem with support and resistance is it doesn't actually stop price. 9 times out of 10, price will just trade through it, and then it might cause a reaction, but it will trade through it. So the sooner you look at that, pinpoint accuracy. And then what will happen is people will make a video for you. They'll go onto YouTube and they'll say, look, I've drawn the support and resistance line out from here, here, and here, and look, it's rejected off it perfectly. The problem is when you can draw things on completely randomly and find that price rejects them over and over again, pinpoint accuracy there, it's for me, when I looked at that, look at that, there's two rejections there, one there, and almost a perfect one there. So support and resistance, whilst I'm sure it has elements where it can work, you'll find more often than not, it's going to lead you into false trades. And what I teach, or what I will be teaching instead, and I've literally, just before I came onto the Zoom with you guys, I recorded a video on supply and demand. What I will teach you is about supply and demand. Now, supply and demand is where you can actually see what's happening to price, okay? Price will come into these supply and demand zones, and there's a logical reason. For me, when I understood how to trade is when I understood what is actually happening in the marketplace. So do any of you currently understand supply and demand zone as it stands at the moment? Do any of you have a good understanding of it, or any understanding of it? Okay. Yeah? Yeah? Okay, cool. So a little bit. Okay, cool. So look, what a supply zone is an area in the marketplace where there's a big reaction, okay, or a big move. So this is a supply zone, this is a supply zone. And the reason, how we quantify them is there's a couple of things that we need. We need price to have cleared some sort of liquidity above, okay, and we need price to have left an imbalance below. And what these moves tell us is that there's a load of money flooding into the marketplace. So what's happening all the time on the marketplace is that there's buyers and sellers everywhere. So let's just use this one as an example. Okay. In order for price to move up, we have to have loads of buyers. Yeah, everyone with me? So there's got to be loads of buyers in the marketplace. Let's just change that to blue for buy. Okay. So there's got to be loads of buyers in the marketplace, and this is what ultimately moves the market upwards. Okay. Now, what happens when it changes direction is the sellers, they outweigh the buyers. Okay. Now, trading is a zero-sum game. So I always imagine it like a set of scales, like an old school set of scales with weights either side. Okay. You've got buyers on one side, you've got sellers on the other side. Now, if the buyers are outselling the sellers, the market moves up and it tips the scales one way. If the sellers are if the sellers are outweighing the buyers, it moves the other way. And it's as simple as that. It's a zero-sum game. When the buyers and sellers are pretty equal, we get these ranging areas here. That's why the market ranges, because the buyers and sellers are pretty much in equilibrium. And what happens in these areas is loads and loads and loads and loads and loads of orders build up. And the big players in the marketplace, they're buying and selling all the time. Okay, so they've got loads of buys in here and they've got loads of sells. Eventually, what happens is the sells, it's like a dam bursting. Okay, so I put a GIF in the group yesterday about showing what it looks like when a dam bursts. Okay, the sellers eventually outweigh all of the buyers that have bought from here and placed stop there and bought from here and placed stop there. They get taken out, they get swept out the market. Yeah, so in these areas, we are looking for these kind of slow, what I call an exchange of hands. It's very clear, as you can see here, that buyers have slowly turned into sellers. Can everyone see that? Yeah, pretty clear that we've got buyers, and then these moves. These tell us that the strong money is coming into the seller's hands. When we start to see these big moves down, that's when I start paying attention. For me, I'm just looking at the highs usually. I'll place my stop above the high because for price to reverse in direction, after it's broken these structures, it shouldn't move above these highs again. Okay, because if it moves above the highs, the big players lose money. Okay, they've pushed the market down here, and if the price comes up here, they lose on all of their positions because they've closed off their buy positions here. If the price goes back up further, their sell positions go negative. So if you think about how the big players work, it makes the whole of this process a lot easier to understand, and it will take some getting used to. It will take probably me going through this a few times with you guys, but it's really, really simple. If they're pushing the marketplace down, they don't want the market to go any higher. If the market goes higher, then their sell positions lose money. So if they bring the market up here and they close off their buy positions that they've been buying, if they close off their buy positions there and then the market moves higher, they now lose cash. And that's why you can rely on these areas, because usually they will hold. It looks like this CAD JPY, it may actually end up running our stop, but this could also be a good area it could reject from. These kind of news-based events, they're often a bit like temperamental, so we'll see how this one plays out. But if it ends up in a loss, it's not the end of the world. Loss is a part of it, guys. We've got to get used to it. All right, so that's my first kind of main setup. 3 pushes into the zone. 1, 2, 3. Usually there'll be a raid on the highs before you've got a low, and what this raid does is it takes out all the early sellers. Anybody who's sold from there with a stop above that has now been stopped out the marketplace. They push the marketplace down. They then take out the buyers. Anybody who's bought from there has now been taken out the marketplace. That means on either side of this marketplace, buyers and sellers are out of the market. Simple as that. They can then push the price back up, lure people in. They'll lure more people in there, look. So that's more people with stops there. That's more people with stops there. And then what they do is they push the marketplace up once again. They clear out this liquidity. And now sellers are taken out of the marketplace. Early sellers, early buyers have also been taken out of the marketplace here. Look, let's pop that in there. So early buyers have been taken out of the marketplace again. You can see they're just constantly manipulating either side of the marketplace. It happens all the time. So they're taking out people either side. This is what this choppy price action often does. But we can just be a bit clever with it and be like, well, actually, we've got the raid, we've got the breaker structure. This is now a really good zone for us to trade from. So we're going to draw out that zone, stop above the high, hold it. Wish I'd taken profit on this one because that's really annoying. If that does stop me out, I'm going to end up in a loss instead of a profit there. So that we'll see what happens. Hopefully it has another push back down. So this is what's happening in these moves. They're manipulating the marketplace. They're taking people out either side before they move the market in the direction that they want to. Okay. Now I'm going to talk you through my my second kind of preferred setup. I think we had one on GU last week, so let's just go through that one. Yeah, okay. So this is more of a continuation setup, okay? We normally use this as a continuation pattern, but the theory is basically the same. Market's moving down, okay, and it creates some sort of consolidation. What happens is we then get manipulated. Push up, it raids on the highs. Push down, it breaks structure, and then we'll normally get some sort of move back into zone before the bigger move, okay? GU is a perfect example of this week. This is what happens. We have a raid above the highs. That is a raid. Okay, that has manipulated the marketplace. That's taken out any liquidity that was sat above. Okay, we then have a breaker structure. Okay, and this breaker structure indicates to us where market is likely to go. We know that the strong money is in the seller's hands. So that gives us an inkling. We've swept out the stops above here. We've broken structure down there, which is then continuing the downtrend. And it's left behind the supply zone there. Okay, so now we can start looking for entries. And very simply put, I normally do about 50% of the zone. We just take the trade like that, and it happens over and over again. So this is a very similar setup, but it's more of a continuation pattern. I trade two setups, and that's it. It's all I need. It's really, really simple. So here we had that exact move. Okay, we had a raid on these areas here. So again, I'll talk you through what's going on. We've got liquidity sat there, and so what they've done, market is moving down. What they've done is they've pushed the market up and they've taken out all of these sellers. Anybody who's sold from here has now been swept out the marketplace. What then happens is people think that the market's going to go up, so they start buying it. They start placing buys there with stops there, buys there with stops there, buys there with stops there, and then this is a manipulation move where they then take all of these people out. So now the early sellers have been taken out the marketplace and the early buyers have been taken out the marketplace. Everyone's out the market. What this has also done is it's given us a major make breaker structure. Did you notice that the raid that we had before, whilst that took out liquidity, it didn't break any structure? Okay. That is a real key telltale sign for us that this market is probably going to go down. The other thing that tells us the market's probably going to go down is which way it went in second. So it pushed up first and then pushed down second. So the most recent breaker structure was to the sell side. We're in a downtrend anyway, so we're pretty happy that the strong money is in the sellers. We've raided these highs. We've pushed up. We've pushed down. We've broken that structure. So now all I do is I just draw out my zone and I take it. And that ended up being a lovely 10R trade. 9R. I think I stopped it about here. I could have held it on a little bit longer, as you can see, but stopped it about here. And that gave us a lovely trade on that. And guys, it is as simple as that. It's two setups that I trade in key areas. I'm looking for kind of either trend continuation like this one where we know we're in a downtrend, or I'm looking for a... Can everyone hear me? It's just I've got a message saying my internet's playing it. Everyone all right? Hello? Hello? Yeah, we back? We back? Yeah. Okay, cool. So the setups that I trade are really, really simple. We're looking... Keeps glitching, does it? Okay, well, look, guys, I've got it recorded. I've got it recorded for you anyway. Okay, so I'll send it. I'll put it into the chat at some point today, so you can kind of watch it back. So yeah, so these are my two setups. Okay, this is a continuation setup. We're looking for these key things. We're looking for a raid on the highs. What we don't want it to do is break, obviously, structure to the upside. If that broke structure to the upside, I'm not considering it, because that's now telling us that the market's probably going to change the direction. We're happy for these moves up as long as the structure stays intact. For those of you who've watched my market structure videos on YouTube, you will see that a structure should stay intact. Okay, if we're in a downtrend, these highs shouldn't be broken. Why can't they be broken? Well, it's what we were just talking about with supply and demand. Okay, supply areas cannot be broken. If they're broken in a downtrend, they lose money. Okay, and that's why in a downtrend, we're pretty confident that these are protected highs. Price shouldn't go any above them. So if in this move that we're looking for a continuation down, we see price do this, we don't want it. We don't want anything to do with it. In fact, from that area there, you might have even been looking at a buy, but in this instance, it didn't happen. But the fact that it's raided those highs and it's pushed down and broken structure to the downside, that's a great sign for us. That gives us a really clear indication that the market's going to continue down. So we mark out our untested area, which is here. All of these, again, this is liquidity. Okay, all of these areas here, they have money above. Say again? Okay. So all of these areas here, they have liquidity sat above, look. And ultimately what happens is price manipulates them again and pushes down, but it manipulates them into a zone that we now want to trade from. Okay, so it's a case of kind of stacking they're stacking lots of little things and lots of little kind of signals and keys in our favor, and building a bit of a story as to where we want the market ultimately to go. So it's really, really important to have those sort of things in mind. All right. So look, we've got about 10 minutes left now. I've got to shoot in about 10 minutes. So I'm going to kind of throw it over to you guys. Do any of you have any questions? Put them in the chat. If you want to put them in the chat, I can talk them through. We've got 10 minutes. So we've got a few questions we can go through. Yeah. So Yes, sometimes. So look, I'll deal with the first question first. So yes, I will always start on the higher time frame. The reason why is the higher time frame areas are the ones that are more you can trust them more, basically. So you're more likely to get a higher time frame zone to hold than you will do a lower time frame zone, and the swing highs on the swing lows are more reliable. The big institutions typically they trade on higher timeframes. They're not sat on 1 minute charts and taking 2 pip stop trades because they're dealing with millions, if not billions of dollars at a time. So they're not concerned about the lower time frames. That's all of our movements and the bank's movements, because when we talk about the institutions, the people that really move the money, they're bigger than the banks. They are massive, massive groups of traders who are moving the marketplace in certain ways. Nobody really fully understands how it works, but that's just the way it works. So they're looking at higher time frame only. So for them, if we want to trade alongside how the banks trade so that we can stay in profit more, we want to be trading the same zones. Now, even 4 hours quite low, but I find it quite reliable. For example, you can clearly see a supply zone here because there's a good reaction. If we draw that, it's also a swing high as well, which is again a protected area. If you draw that across here, you can see how reliable they are. If you draw your supply and demand zones out on higher time frames, you'll find they are a lot more respected. If you draw your supply and demand zones out on lower time frames, you'll find that, yes, sometimes they'll get broken through, but more often than not on the lower time frames, they will be whacked all the time because there's so many of them. This one was a bit of a raid, but it pushed down. They are respected a lot more if you end up, trading on the higher time frames. You're always going to get ones that are traded through, but they're a lot more reliable and they move a lot slower. You're much more likely to catch them on the lower time frame. Sorry, much more likely to catch them on the higher time frames than you are on the lower time frames. Okay. Right, so look, we've reached our limit now in terms of the Zoom. We'll try and jump on another Zoom chat at some point next week, guys. What I'd say for you in the time being, if you put any questions across to me, I'll record some videos for you and we'll go from there. All right. Thanks for tuning in. Speak to you soon.